Hey everybody, Troy Marsh here with Marsh Home Group and Keller Williams Consultants. Welcome to 2023. We're here with our first market update of the year, so let's jump in. So what we're looking at here, and a couple things I want to point out to you guys. Number one is the fact that we have fewer listings on the market, and we'll go through our rankings here in just a minute. But number two, we have fewer solds. But remember, solds are based on past experience and past activity. The thing I'm looking at this month that is really jumping off the page to me are the pendings. Pendings are up month to date 4.9% compared to last January, while at the same time we have fewer listings. So that means the listings that are coming on the market are going into contract at a higher rate than they were last year. And so that's something I'm really keeping my eye on here when we're looking at this data. The number one conversation point is absolutely interest rates. And what we're seeing even this week with some slowing economic data is interest rates are going down. And remember, there's a difference between 30-year mortgage rates and Fed funds rate, which is what the Federal Reserve raises when they say that they raised interest rates. So keep in mind that if we continue to see economic activity slow, and more importantly, inflation going down year over year, actually not year over year, but month over month, we will begin to continue to see rates go down over the next several months is my prediction. One thing that's changed this week compared to, I would say, the last 6 to 9 months is we are getting positive news from the housing market. So one of them you'll see here on the left is builders seeing a turnaround in housing starts on the horizon. So this last month's report or survey of builders was the first time in 11 months that they've seen a positive, an uptick in builder confidence. So that's important. The other thing is last week we saw mortgage applications going up. I have a good friend and actually my business coach who owns a mortgage company, and he's seen the number of people inquiring about new loans up 35% this week, even compared to last week, which is actually what these numbers are based off of. So what we expect to see is that this report next week is going to be even better. What I'm telling you is that this is still a pretty well-known secret that the direction of news, the direction of numbers is starting to point in the positive direction with regards to housing. If you're thinking about buying a home in 2023, I believe that the first 3 to 4 months are probably going to be the best time to do that. As soon as the general public starts to see that mortgage rates are down and that the market is stabilizing, we're going to see a lot of people jumping in, and we very well could be back to multiple offers. Another good piece of information this week is inflation. So back in October, they surveyed builders. And when they compare October of 2022 to May of 2021, which I would say was the height of the pandemic supply chain crush, we see that the main items with regards to building have all experienced some pretty major transitions. So 90% of builders in 2021, May of 2021, said that there was a shortage of plywood. Now it's down to 36%. Framing lumber was 94%, now down to 37%. And OSB, which goes on the outside of a lot of houses and also used for roof decking, 92% of builders said there was a shortage, now only 33%. And frankly, this was back in October. I would venture to guess that now, from what we're seeing locally here, where builders are actually finishing houses ahead of schedule, that number is probably even lower. All good signs for what inflation numbers are going to look like in the future. So how's the market compared to last month? We have really a lot of seasonality going into play here. But one of the things that is really alarming to me is that we actually have fewer new listings or I'm sorry, we have fewer homes on the market now than at the beginning of December. And the reason why that's alarming to me is because typically a lot of people take their home off the market for the holidays. And so the fact that there are more houses selling than are going on the market, which is causing that decline in active listings, is something that we need to watch, because that's the number one reason why once mortgage rates get to a place of comfort for people, we're going to see the bidding wars, the multiple offers, the appraisal gap coverage, and all those things that buyers really didn't enjoy come back. So that active number, or the number of properties for sale, is something I'm really keeping an eye on. Your average sales price is still declining a little bit in the market compared to the peak, which happened in actually June of last year. But this is a very seasonal and normal trend. A lot of the more expensive homes historically tend to sell in the summer months, and therefore we do see average sales prices go up a little bit, or at their highest point typically in that June, July, August time frame, and then they do tend to trend down. Now I would say we've definitely trended down a little bit stronger this year than in years past, but if you look, we're actually still above where we were for the majority of last year up until about the April timeframe, March or April. And so we should, if we're going to go into normal seasonality, we should see for January, February, March, we should start to see that decline drop and the increase kind of going back up. So that's something we'll be looking at in these future upcoming months. And another thing that happened last month, which had not happened since May, is we saw a decline in the months of inventory. What months of inventory means is that if we listed 0 new houses in the future, it would take us, based on the number of sales that happened last month, it would take us 1.3 months to have 0 available listings. A balanced market is 4 to 6 months. And so we are still very much in a seller's market. So if you own a home and you would like to move from that home, do not believe the headlines that it's impossible to sell. Have some markets become more difficult? Yes. Will you be getting 20 offers? Most likely not. However, most neighborhoods where I've been doing market analysis on over the last 2, 3, 4 weeks have still been showing the properly priced homes, the properly conditioned homes that are, again, priced to sell for that location, are selling within 1 to 2 weeks in most price ranges in most areas. Now, as you go up in price, obviously mortgage rates affect things more, and obviously different areas tend to move faster or slower than others. So if you're interested in what your home's worth, definitely let me know. So what does all this mean? Let's jump over to what you guys are all waiting to hear, and that are my rankings. So available homes. Unfortunately, available homes are going down compared to last month, which again, I believe is not going to bode well for buyers as we move into a busier spring market. Sold homes also going down. This is obviously a direct correlation to the number of listings that are not available, and also weakened buyer demand over the last, I would say, 4 to 6 months. The new listings, unfortunately, are also not good. We are below last year, which we were low last year. And so if we don't get more new listings into the market, we're going to have a major issue with buyers who do need to buy, finding properties, which then again is going to increase prices and also create more bidding wars. The one positive on my list is interest rates. Interest rates are definitely trending in the right direction. We've seen them as low as close to 5.5 for some loan types, but certainly your normal conventional nearing 5.75, definitely below 6 this week, so that's very good. And then lastly, average sales price definitely come down off the peak, which is very normal. It happened even in 2021 when we had the best market ever. It peaked in the summer and declined a little bit through the winter months. So again, what we're going to be watching there are the next 1 to 3 months to see how it reacts as we move into traditionally what would be our appreciating months of the year. So thanks so much for watching my market update for January 2023. You guys have an awesome day, week, month. See you next month.